Thank you very much, Herbert. And as a customer-focused organisation, I'll make sure I'm brief. Andrew, does that work for you? Look, Mark, thank you very much for a really interesting talk. And I think the reason that it was interesting for me is that it's not really a focus about us and our businesses, but it's about whether P&G itself is ready. And I think perhaps I've got the shortest presentation of all, in that I can answer it in one slide and one word. And of course, Steamships is ready. We've been ready for over 100 years. But I don't think that's really the key question for us. The key question for us is the government ready? Is the infrastructure of P&G ready? Is the underlying industry ready? And that's what I'll talk a little bit about. And we heard this morning Gary Seddon talking about the journey that Air Niugini is going on. We've heard P&G Power talk about the journey that they're going on. We've heard about P&G Water talk about their power journey that they've got to go on. And in all cases, if you listen carefully, they'll be ready in 3 or 4 or 5 years' time. Even though we've got a delay of 6 months, project will start ramping up this year. So whilst the businesses may be ready, the real challenge is whether we have the departmental capacity to deal with the challenges coming the government's way. And Mark, as you so rightly said, the core is ensuring that we have the capacity and the skills in the private sector and the public sector to really answer those. So unfortunately, because I've got 13 minutes more, the long-winded way of saying this exactly the same thing is this. We have the benefit of hindsight. And if we look at what's worked in the past, 3 things seem to work well when we focus on delivering value for P&G. And that's making sure that we get the equity balance right. How do we ensure, as Mark has so rightfully said, that it's the people of P&G, the citizens of P&G, the guys that work, the 4,000 people that work for Mark and the 4,000 people that work for Steamships, how do they benefit and how do we ensure that we see by the end of this 15 years an established middle class that has access to good quality schools, good quality hospitals, and is then able to grow the non-mineral sector that the government is very right to focus on. So when we start a new business, whether that's a joint venture, which I'll talk a bit more about in a minute, or whether it's a new business that we own 100%, we have 3 considerations. What's the right equity split, the right benefit that flows through ownership and through the distribution of profits and dividends? What's the right recruitment policies for those organizations, balancing the need for technically competent, skilled individuals with ensuring that we pass those skills and techniques over to Papua New Guinean citizens so that in the long term they're able to do the jobs that in the short term we might need to reach out to the world to get. And lastly, we think about the community grants and philanthropic aspect, the social aspect of the businesses, which are perhaps a lot more important in P&G than they might be in other markets that the international companies would work on. So Steamies thinks we do this reasonably well. We've certainly got a long track record of working in joint ventures. And we tend to choose to work with the LLGs and in the more recent times with the provincial governments, particularly of Gulf and Central Province, when we're focused on Papua LNG, to ensure that not only are we listening to those from the project-affected areas, but we're ensuring that the money goes back directly to those individuals and doesn't just end up in smart apartment blocks being developed by Lanco heads in Port Moresby and elsewhere. So we're a commercial organisation. We need to make profit. We need to deliver those dividends to our shareholders, be they local or international. But I think it's very important in this particular project period that when we're talking about Papua LNG, Pyongyang, wildebeest after it, that we all bear in mind the obligation to have a social dividend as well as a financial dividend. Let me talk about 2 joint ventures that we've done specific to Papua LNG and then the other two projects afterwards. The first is Gulf Maritime Services. This is a good example. You'll see there Steamships is the minority shareholder. We have Gobi Freight Services, GFS, who are Gulf landowners obviously from up in Gobi. We've then got the Gulf Provincial Government, and then 2% of each of the three categories of project-impacted landowners. In the first instance, as the mapping continues, that's held by the Gulf Provincial Government, so they've got 8.5% at the beginning through Governor Chris Ivetta's organisation. And the idea being that over time, we can transition from the two commercial entities into more ownership from the local landowners. GMS is focused on the maritime component, and I'm very pleased that yesterday we signed a new joint venture, again, local landowning joint venture, with Laba Holdings. So Laba Holdings, for anyone who's not familiar, that's the landowner group that is around the Papa Lele plant, downstream plant. And the focus here with Ezekiel Tareka and Samoy and their team at Laba is the onshore logistics piece around downstream Papua LNG. And again, just as we have done with GMS, the focus is on ensuring that we can use our expertise, our governance, our access to international best practice, and Steamship's very strong balance sheet to start transferring the assets over time and the skills in the short term to the landowners around Papalele. If you go to Papalele now, you only have to go 100 meters outside the fence to see that round one wasn't very successful in doing that. The villages around Papalele have not benefited as they should have done from PNG LNG, despite the great work that Exxon has done, and credit Exxon. It's by no means a criticism of the work that joint venture have done, because they spent a lot of time upskilling. It's just an observation that as we move forward, we need to do more, otherwise the inequity that comes with resource projects is going to start coming back and biting us. We've also done investment joint ventures. The picture here is of Harborside South. That's a joint venture with PNG SDP from Octedi, the Octedi Legacy Investment Fund. And that's 50-50 joint venture with them. And it's designed to be a commercially successful joint venture that then starts delivering dividends to the people of the Gulf province. So we've started paying dividends already. And Harborside South, the red block at the bottom there, we signed the last lease for that, so it's fully tenanted. The last lease was with ANZ this morning, who will move their country head office into Harborside. And then Marriott Executive Apartments will open early next year. And it's a model that we're replicating up in Mount Hagen, that we will replicate in Leh, and replicate elsewhere as we move forward. So we've talked about the physical investments. We've spent a lot of time on community grants and scholarships. Everyone does this. Our particular focus is on the marine space, and in particular ensuring that we have a workforce that is balanced and includes the 50% of the population, the female population, that are often left behind in this. So with the Australian Maritime Awards with DFAT, we've been very focused on trying to get that equity balance addressed. And one of the things that we're looking at, Gary Seddon, if you were listening to him, he talked about the lack of pilots. We have the similar lack of seafarers in country, which is astounding given that we're an island nation with over 600 islands and utterly dependent on our marine transportation. So we're looking at whether we should be establishing a maritime training college in Port Moresby to complement the one that already exists in Madang, but isn't functioning particularly well. So if we can replicate some of the schools that Steamships and Swire and other parties have promoted elsewhere in the world, that will be a great advantage for Papua New Guinean maritime trade. So portside, very much targeted at this round of expansion. It's 38 hectares. At the moment, it's 100% Steamships owned, but very happy to partner in equity and in development on that. And we hear a lot of the government talking about downstream processing, about manufacturing. Mark was talking about the dearth of manufacturing. This area is particularly suited to manufacturing. And again, our approach is that steamships will either provide a bit of dirt, or we will build the infrastructure, or indeed we will build the factory and the components inside to help less well-funded businesses start the downstream processing and manufacturing. So that's very exciting. We've got about a 300 million kina spend in the next couple of years, with about 100 million identified already for next year. But that we expect over time will be about a billion kina development, and once up and running will be about 1,000 new jobs. Of course, that depends on the nature of the activity that goes in there. But these are the sort of projects that over time will be transformational. And the important thing about this is not a render on a map. This is actual work that's happening and will be happening from now on. So you'll see warehouses, you'll see petrol stations, clinics, shops, all starting to go on up from next year. This is a oil and gas focused conference, resources and energy conference, so I'd be remiss not to talk about our logistics division, because here we've done what a lot of organizations in P&G are not able to do, and that's invest ahead of the curve. For many of the landowner companies, they don't have access to the funding that Steamships does. So we've been able to go out and acquire 3 tug and barge sets. We're able to go out and acquire 2 new liner vessels and put them into the schedule in advance of what we expect to be a 15-year construction boom, but a doubling and then a tripling of the economy within the foreseeable future. And the idea being that these additional assets, whilst they serve Papua LNG in the short term, will then be absorbed into the general economy afterwards. And importantly, whilst we might buy them, the idea is that we'll be able to transfer them over time through equity buyback or through dividend purchases, essentially hire purchase agreements with the landowners that we work with, such that by the time we get to the end of the project, the landowners themselves own the assets and Steamships steps back out. So I finished with the 2 minutes to spare, Mark. I think you did a very good job at really highlighting the need of the industry to focus on that training. And so I'll finish reiterating the challenge back to, not too many in this room, but to the government entities. And that's really one about capacity building now, not talking about 2 or 3 years' time. Mark mentioned the PALM scheme and mentioned that it was targeted at hospitality. We're the biggest hospitality operator in the country, and we've not been able to send a single person on that scheme, albeit that we have 100 people per annum lined up, ready to go, because of government capacity to help support that process. So there's a great example of where we can start delivering direct benefit to Papua New Guineans and Papua New Guinean economic sector if we can get that capacity built within government and within the departments and sub-departments, agencies that are so critical to helping us all deliver Papua LNG. So with that, thank you very much indeed, and thank you for your patience and perseverance on day 3.